Hey guys, Akil Stokes here. Welcome back to another video. Today we're not just analyzing a chart, we're going to review a trading idea from one of our Tier 1 trading members and walk you through a step-by-step process of how to make decisions in a professional manner. This process is going to eliminate confusion, it's going to kill FOMO, the fear of missing out, and it's going to keep you from forcing trades that don't actually have an edge. Because here's the truth, right? Most traders don't lose because they can't spot opportunities in the market. They lose because they don't have a structured process to follow. And today I'm going to show you exactly what a structured process looks like, and that is going to be our 4-step IPDE process: identify, predict, decide, execute. And why do we follow that process, you ask? Well, for two reasons. One, consistent analysis plus consistent execution equals consistent results. And two, when we're analyzing a chart and looking to involve ourselves in a trade where we have risk on the table, let's just say that it's better to have as much relevant information as possible and not let any of the clues slip through the cracks. All right, let's hop in.
All right, Euro Pound, 1 hour time frame. Is it a potential trend reversal? And if yes, should you aim for target at 87.46? Or if it's not a trend reversal, is the price still going to previous structure highs? All right. So are you still here, Leo? All right. So I want you to walk me through this. Let's go through our IPDE process, right? So let me know what you identify. We can walk you through this process and hopefully within it, we can answer all these questions for you. So what do you identify? What has price recently done? And again, we should probably stay away from the words like trend reversal, because let's make predictions. So it violates previous structure. All right. Is this the structure level right here? You're saying it violated previous structure? So it violated previous structure and a 3-point move has been made. Yeah. So we have a 3-point move. Now, what I want you to keep in mind is that the 3-point move, right? You're looking at it, you're only isolating this 3-point move from February. So you would also want to go to a higher time frame and see what the bigger picture is, right? So if I were to go, if we're looking at, and I don't know which 3-point move you're considering, but we have two of them. We have this could be a 3-point move, even though we haven't technically closed yet, but or this be a 3-point move. So I think what happens is we initially see this and we say, okay, bullish trend. Would you guys all agree? You can even take this one step further in here, right? We'd all say bullish trend. But in just looking from this perspective, are we right to say that this is a bullish trend? Do we know for sure? Because are we going to ignore what just happened here maybe? Like, no. So I always want to look for perspective first. So how about we go to a 4-hour chart and let's see what price is actually doing. Oh, no. Oh, no. Well, let me ask you guys this question here. Does this perspective change your mind on the bullish trend? Right? Because what was our most recent move here? Oh, no. Lower low, lower close. And although we have this 3-point move that Leo described, is this 3-point move a bullish trend, or is it a short-term bullish trend that is actually just an outside return in the bigger bearish trend? Fractals, don't you love them? But does this change your perspective? That's the yes or no. That's the main question, and that's for the group. Does this change your perspective on things? We went from hell yeah, bullish, duh, to maybe you're having to think about it. So this is what I love about top-down analysis, right? Again, this is like, imagine, I like using multiple time frame analysis when doing price action and structured trading. You don't need to. You guys know my philosophy. You can do whatever the hell you want as long as it works within like the business frameworks of what it takes to be a consistently profitable trader. But I look at it as my top-down analysis as I'm climbing to the top of a hill and I am surveying the land. I am looking down. I am seeing the ocean. I'm seeing mountains. I'm seeing valleys. I'm seeing cows and buildings. I'm seeing everything. It gives me a good idea of getting perspective, right? Because think about it like this. If you were to stand, so we have these things called the Great Lakes
in America. I'm sure many of you guys have many, I'm trying to find a picture for you. Many of you guys have something similar where you live, right? We have something called the Great Lakes in America, and they look like this, right? So I've often visited the Great Lakes because there are lots of nice vineyards there, and the wine is fantastic, I must say. But there's even a wedding we had on one. These lakes are so big, right? Maybe here's a better picture. These lakes are so big. If you were to stand right here at the beach of the lake and you looked across, you would just see water, right? And if you look across and you just see water, what might you think? You might think that you're in front of an ocean, right? This is probably similar to people that thought the earth was flat back in the day, or people that still think it now. But you would assume that you're at an ocean. You'd be like, okay, this is the end of land. This is the extreme. There is no more land. Here is an ocean, because as I look out at the horizon, it just goes on forever. But imagine if you were to climb a massive mountain and you look down at that same thing. Well, now you see that great area of water, but you also see land on the other side. Does that change your perspective on things, guys? Right? Does your view from here the same as your view from here? No, it changes your perspective. So this is what I like about higher time frame analysis. It gives me the view from the mountaintop. I can actually see stuff, bigger picture for what it is. Then once I have that idea where it's like, hey, this is just a lake, there is land on the other side, maybe I will sail a boat across, versus, hey, this is an ocean, probably shouldn't sail a boat across, right? It allows me to go down to my lower time frame and have a better perspective and better get my plan of attack. So I always think multiple time frame analysis is good for price action traders. Again, it's not mandatory. You don't have to. It also depends on your strategy. If you're trading a specific strategy like the FTB, for example, where you're just relying on a very specific signal, or even like a counter trend strategy where it's like, hey, I just need to identify structure. You don't have to have that perspective, but I do think it's helpful. So all that to be said, aside from the great wine that exists in the vineyards of the Great Lakes, I got a friend that works there, so we get to get in for free. It's awesome. Our perspective has changed from when we were on the hourly only looking at this to the 4 hour only looking at this. Now, the hard part is as you bump out to a daily and a weekly and a monthly, that perspective is going to change as well. So, right, you can get into this weird little inception trap where you just keep going through different kind of versions of reality and then you forget what is what. So this is why you have to be disciplined and dedicate yourself to like, hey, this is my higher time frame every time. I don't care about what's happening above, or this is my trading time frame every time. I don't care about what's happening below. But I do think you should have this perspective. So going back down to the hourly, we know we have our 3-point move, right? Even if we are making, so let's say we're ignoring the higher time frame analysis and we're saying, hey, 3-point move. We identified a potential 3-point move, right? The next question is, okay, well, if we have a break and close above structure, and I'm not sure which level the trader was acknowledging, either this one or this one, either way, the next question is what's our prediction? So what would be our prediction, Leo? So if the hourly is your higher time frame, then you go down to the 15 if you wanted to, right? But regardless, so what's the prediction now? Now that price action, let's assume we broke and closed above. And these are going to be the little safety nets that we put in to stop ourselves from doing weird stuff. We have the break and close above right here. Again, we technically haven't done it, but let's assume we did. So what's the prediction? If we see a break and close above, we predict that price is likely to do what? Higher. Okay. So that's step one of our prediction. What direction is price likely to go in? Check, higher. The next step of my prediction, again, I'm trying to talk this out to you so it's very systematic. That's why I'm like, don't worry about like specific numbers and stuff yet. Let's just work through the process, right? Because before we can predict what number higher we're likely to go to, we need to first predict that price is likely to go higher. So now that we predicted price is likely to go higher, now the next question is, if price action goes higher, then where are we likely to go higher to?
And this is where Leo says 87.46. And this is the part where, depending on you as a trader, your predictive style may be a little bit different, right? So Leo says 87.46, which is the highest point right here. So now, okay, so we've predicted that price is likely to go higher. We've found the level that price is likely to go higher too. So now the question is this: based on what price has already done, do you believe that there is still opportunity for price to go higher to the level that you thought it would go to, or has price already made the move that you expect to happen? That's the next step of the process. And what we're doing is we're setting up our trade. So what would that be for you, Leo? Did the price already fulfill the prediction higher, or has it not fulfilled that prediction higher and there's still room to go higher? And again, step-by-step process. So we talked earlier about advanced pattern formations and kind of working through like X to A first, A to B second. This is the same thing we're doing for price action trading, where we are checking boxes. And this is what keeps us consistent in our analysis, and it stops us, or stops anything weird from slipping through the cracks. So I don't think there's much room for me because I need to wait for a pullback. All right. So you're saying the price has made the move, so no room to go higher? Just want to be clear on that. Yes or no? Price has already fulfilled your prediction. It's gone to where it's gone. Marcel says, look at the RSI. It's extension right now. Okay. So price has price already gone to the level that you thought it would go to and there's no room to go higher? Or do you still expect price to go higher? Which one? Not yet touched. So you still expect price to go higher. Okay. So because Leo still expects price to go higher, is this a valid potential buying opportunity? What would you guys say for Leo? Yes. Right? Yes. If you would have said no, well, Akil, we've already moved to the level in which I thought price would go to, then the answer would be no, it's not a buying opportunity. Right? Does that make sense? So we're trying to put ourselves in position. So we're identifying what happened, we're predicting, and then based off that process, we're deciding, right? The D part, decide, is this a trade I should look to get involved in or not? Sorry. So you said there is room to go higher, which means you still can take the potential bullish trade. So now the question is, what do you need in your rules to involve yourself in this bullish trade? So you said, but for my rules, I needed to wait for a pullback. Okay, so that's the next step, right? You've decided that, hey, I'm looking for a move higher. In order to get higher, you need a pullback, all right? So let's work through the if-then thought process, right? Or if-then syntax, right? If-then. So the first part is already written out for you, all right? If price pulls back in the structure, then what? Then buy. But is it just so I just buy whenever? I close my eyes and buy? Do I put a limit order at a specific price? Do I need a certain thing to happen in the market? Marcel said earlier, look at the RSI. Can you expand about that, Marcel? What would you like me to look at on the RSI? And let me know how it helps or doesn't help our trade. Okay, so here we go. So if price pulls back, and guys, this is our rules, right? I'm not going to write the whole thing out. I will write the whole thing out, right? This is our rules. If price pulls back, am I assuming into structure, or just does it matter? Structure, Fibonacci level, doesn't matter where. Just so I can write these in. Okay, let's just say structure. If price pulls back into previous structure, then look for double bottom, right? So guess what we did right here, guys? We decided in our plan. Now our job is simple. What is the next step in our job as traders? What do we do now? Previoso. What do we do now, guys? What's the next step?
We wait. Yeah. We wait to see if price gives us the thing that we need. We sit back, we wait, price does its thing. If it pulls back in the structure, our ears perk up a little bit. Like, okay, could be happening here. And then if it gives us double bottom, then we take the trade, right? There is one more step. We got to measure out stops and targets. That comes as well. That's part of the process, EST, entry, stops, and targets. But yeah, in general, this is the process, right? So the point I'm trying to make is this, right? If we develop a process, do you see how this stopped us from any confusion? It stopped us from doing anything dumb, given in the FOMO or whatever, right? It gives us a routine. And as human beings, we like routines because routines make us feel safe, right? There's a reason NBA players do the same thing at the foul line every time before they shoot. They spin the ball twice, dribble it, tap their hand on their thigh, and shoot it. There's a reason why baseball players, especially before the pitch clock thing, would, after every pitch, step out the batter's box, right? Take their glove off, readjust their gloves. There's a reason when people Ronaldo takes a free kick, right? He steps back and he does that he stands wide and does that big breath thing, right? This is a routine, right? When you're at practice, and speaking from a former athlete, you, especially in high pressure situations, which I think we would all say trading is, we practice this over and over again, and it gives us a level of comfort. And that level of comfort is what calms our nerves, and what calms when we have calm nerves, we're less likely to make like panicky decisions, and that's good. That's good. Yeah. So no matter what we're trading, we want to have a process. Leo says, but is this counter trend trading? Yes or no? Here's the question. I want to answer this question for you first, right? Because it could be and it can't be, but does it matter if it's counter trend trading? And these are the comments that piss a lot of people off because we're conditioned to think it has to be trend continuation or counter trend. Before we answer if it is or not, does it matter? Does it make a difference if you were to label this counter trend trading or not? What would it change? This is an open question to anyone. What would it change? Would it change anything in this trade prediction? Would it change anything? If I told you this was trend continuation trading, would you automatically bail on the trade? Like, oh no, If I told you it was counter trend trading, would you automatically bail on the trade? No, right? And that's what I say. We give too much power to these words, trend continuation and counter trend, right? I'm not saying that they should be powerless, right? You should have an idea of what the underlying direction of the market is, but we don't want to kind of overcomplicate things, right? Now, to answer your question, is this counter trend trading or trend continuation trading? It is both, right? Because on one hand, you have a short-term bullish trend, right? This is a short-term bullish trend, which we agreed on. And you're looking for a pullback and a continuation to the highs. So you are trading a short-term bullish trend. At the same time, bigger picture, we saw that the bigger trend is bearish. So you are technically getting long, trading the pullback, right, of the bigger bearish trend, which would make it a counter trend trade. So it would be a trend continuation technique into a counter trend trade. And again, if you just kept zooming out, oh no, then you would see even bigger moves and bigger moves, right? So it ultimately doesn't matter unless you're planning on taking like extended targets. That's when it would make a difference. So like if you were someone looking to get short up here would be a good example. If you were someone looking to get short, let's say double top at your level of structure up here, you may consider this a counter trend trade because you're trading at structure, price action has gone long, and you're getting short. This is where the perspective would make a difference, because usually in a counter trend trade, like you're looking for a little move like that, and you're looking to get out, right? Am I right, guys? For you guys that are counter trend traders, you're a mercenary. You're looking to get in, get out, single target, see you next time. But if you have the understanding that, hey, like my bigger time frame prediction is that we may be in a continuation. Well, now you're in a situation where you're like, okay, well, maybe I take a half position out here
And maybe I'll leave a little bit longer, a little bit more on in case we actually get that bigger time frame run. So again, it can make a difference in situations like that. But to answer the question, it is both, but neither at the same time. More importantly, does it actually matter? Leo says, are you allowed to trade the micro trends and also trade the bigger ones? Hell yeah. Hell yeah. Yep. My analysis so it's very similar to yours, right? Now, I do think the move has been made here, but if we had a clear path up to this level, I would look at the same exact thing, right? I like to trade from structure to structure. So I want to identify one level of structure. I want to identify the next level of structure. And my whole prediction is that price is likely, once structure level A is violated, my prediction is that price is likely to go to structure level B. So if we're looking at a move that is here, and then a move is here, and let's say a move is here, right? If price action violates this, I expect us to go to here, right? If price action violated to the downside, then I would expect it to go to there. So my job is pretty much, I'm identifying three levels of structure: the current level of structure, and the next level of structure above it, and the next level of structure below it. And I'm waiting for price to make a decision at that decision point, and I'm looking to trade it to that next level. Then if my higher time frame analysis tells me that, hey, like I'm within the realms of a bigger move, and I can look to get a little bit more off of it. But yeah, structure to structure. All right. Ali says, as we wrap things up, but my higher time frame switches. Well, it should not switch. You should have one higher time frame. If your higher time frame is switching, that's an inconsistency in your rule. You should have you should use the same higher time frame and the same trading. You should use the same process of trading time frames every single time, whether it's a three time frame multiple or a 2 time frame multiple, right? You should not come in the market one day and the 4 hours your higher time frame, the next day your hourly is your higher time frame, because if you have 2 higher time frames, you don't have one higher time frame, right? If you have two, if your higher time frame is the daily, but sometimes the 4 hour, but sometimes the hourly, how are you ever going to be consistent? How do you know which one, excuse me, to do your I and your P off of? You don't. Pick one higher time frame. That's your higher time frame. Be consistent with that. Consistent analysis plus consistent execution equals consistent results. Be consistent in that. Ali says, what made things clearer for me was realizing that there is a long-term prediction and a short-term prediction. That's a great way to think about it. Yep. Your long-term prediction might be bearish, but there can be a bullish short-term opportunity inside of it. Yep. 100%. Yep. You can easily have a bearish continuation and look to take advantage and trade and make money on the bullish pullback within that bearish continuation. Yep.
So I hope you enjoyed today's video. Hope you learned something from it. If you did, hit that like button. Make sure you subscribe or follow. That way you don't miss the other content that I put out on this channel on a daily basis. It's simply amazing. That's not me saying that. That's what I've been told. And again, if you're ever interested in learning how to trade, check us out, www.tier1trading.com. It's not just training courses. Jason Grayson and myself actually sit and work with you through the trading journey. So we are very hands-on in the process, and I think that's why we've had so many positive results. All right, I'll see you guys next time. Until then, plan your trade, trade your plan. Take care.